One of my moonlight job that I do part-time when nobody's looking is to host a podcast called Building the Future Podcast. And when I was asked to moderate this panel, I just went to the podcast mode. Said I'm gonna do podcast with this beautiful, awesome minds and to get them to come to my show. So we just assume that you are in my show, and everybody. We really want to have this conversation. It's more of conversation rather than just question and answer about how can VC build beyond borders and the impact of fintech revolution in Africa. All of us in this room will, if you're familiar with what has been happening in Africa in the last 10 years in terms of VC, you will all agree with me that fintech has played a very big role in that story. It's great to have Paga Tayo here. Before I started investing in Nigeria 2016, and before I came to the continent to start investing after I exited my startup, one of the startups I was reading about was Paga, actually. They are revolutionizing the way people are transferring money and money movement in Nigeria. And it's interesting to see that story played out in the last 10 years, how they've built that ecosystem and also stay on top of it. And a lot of companies have died in the process, but Paga is still standing, and not just standing, but doing well. And today we've got lots of VC here who have put money into the space. My first question, and I will go to you, Eva, is in your understanding, how has the influx of capital, especially into fintech, how do you think that has changed the continent or change services and innovation in the continent beyond just payment in your own experience so far as investing in the continent?
Yeah, so thank you so much. I'm Eva Yazari, managing partner of a venture fund and a multi-asset firm that invests equity and debt on the continent as one of our two markets. For background, I think the flow of venture capital into fintech has set up, we call them the rails and the enablement for many other sectors to proliferate. Obviously, there are still challenges. I'm an eternal optimist, and I'm also a problem solver, and I'm an entrepreneur in my own way, running my own fund, so I see the challenges as opportunities. But I think I'll share an example, actually. So we've got 30% allocation in our fund to fintech, and one of our exemplary companies is called Zanifu, and they operate in Kenya, where our main office is on the continent, out of Nairobi, and they are an embedded finance business. And I think why they're a great example of answering this question is they're not only a fintech lender opening up the floodgates of access to finance for SMEs, they're enabling all sorts of businesses to operate, whether it's just regular kind of retail, commerce, or whether it's renewable energy, distribution. They work with a number of different sectors, and that's where I think the flow of capital has really impacted multiple sectors, like going above and beyond fintech as well. And actually, we did a recent, it was Climate Week last week, and things are moving really fast these days. It was Climate Week last week in New York, and we were kind of reviewing what our climate metrics were, and we actually realized that we had climate attribution from that particular business, because fintech for them is just the lens through which they could provide access to capital to many different sectors.
I mean, it goes without saying that when you unlock capital flow, which fintech enables, exchange of value, it will unlock other businesses as well and other sectors. I used to joke that without Paystack and Flutterwave, a lot of startups in Nigeria would not exist.
Yeah.
But we can say that, but there are also gaps that might exist as well. And I'll throw that question to you, Tayo. You've been in this space for a long time, and you've probably seen it all. But what gaps do you think still exist when people say, we're all done with fintech now?
I don't think you're ever done, per se. So first of all, thank you for having me. My name is Tayo Viosu, founder and CEO of Paga. So just for background, there are three businesses that we have. So first of all is that we have an infrastructure business where we open up our infrastructure to allow other companies to leverage all that we have built in terms of the technology and the processing. The second is a consumer wallet, and then similar to PayPal or Cash App. And then the third is an all-in-one business suite for retail, retail companies. I think the gaps that exist in the market, I think, are really around, at this point, the infrastructure is mostly built, mostly. It's not all 100% there, as Benji was saying. There's still a lot of work to do to get it right, working properly. But I think the place where the big gaps are really around embedded finance. And how do you drive real life problems that people have? And how do you automate, right? And we have a long way to go. So I used to work at a company called Cisco. And I bet at Cisco Systems, there is no check that is ever written manually, right? Once something is approved on the ERP, it goes to their bank and it's automated. We have Dangote does not have that. There's still people writing checks and signing. So, and that's all the way from the small company to the big companies. So there's a lot of room still to take the infrastructure that's built and to embed it into workflows and into process flows of various types of companies, and to digitize even from the small to the medium and bigger companies. So I think that's a big gap that's missing.
So a follow-on to that, and it is open to everyone, who I'm, or Lavanya, or Alvaro. When people talk about embedded finance, the first thing that comes to me, embedded fintech into other sector, the first problem that comes to my head is access to good, cheap finance or reliable finance, especially local finance rather than dollar. That's been a major blocker for a lot of people that are going into that. What have you seen, guys, and how do you, and what ways are people solving that problem, especially in a country like Kenya, Nigeria, Egypt, where the currency is taking a deep dive? How do you solve access to cheap, affordable finance for embedded finance solutions?
I think,
Alvaro.
yeah, I think an interesting way to kind of look at that problem, and it also ties a bit to the first question that you asked on where has the capital actually been allocated in fintech for the past couple of years, is, if I recall correctly, there was, I think, 1.8 billion or 1.8 billion allocated to fintech in the past year. Depending on who you ask, right? There's a lot of people that call themselves, I think, fintechs that are embedded finance or this kind of thing. But I think 60 or 50% of that actually went into equity financing, which means the corresponding part must have gone either into grants or into debt financing. Right?
Yeah.
And I think that's a really interesting way to approach the problem of, hey, it's not only going towards payments, because who are normally the fintechs that are receiving that capital? Well, it's mostly fintechs that lend themselves, right? And so some of the largest rounds, I think, that you've seen on the continent have been actually a combination of equity and financing rounds, and they're making use of equity structure to unlock some of that debt. So how do you get access to cheap financing? Well, it's obvious that the banks, as the previous panel was saying, it's obvious that the banks are not doing it. It's obvious that the telcos are today not doing it in the right way. So fintech is the answer to the cheap financing problem. But then fintechs need to finance themselves in a cheap way, right? And so unlocking that comes with equity financing to fintech so that they can unlock venture debt or other sorts of.
But that creates a challenge when you use equity to fund debt, especially local debt, because your equity is in dollars, for example.
Absolutely.
Yes, but you can't have debt without equity. And that's,
can have debt without equity.
This is the bottleneck that we see, because we are, sorry to jump in, but because we're also a debt provider. So a lot of companies need equity to simply unlock the right debt ratios.
And that's local debt, right? Lavanya, you're about to jump in.
Yeah, no, so I mean, I agree. So I'm with African Invest, and as a group, we are also a private equity firm. I'm with the VC team, and on the private equity side, we've invested in many financial institutions, and we can say that most financial institutions are they're not incentivized to provide debt to high-risk borrowers because they make plenty of money from lower-risk borrowers, right? So I think we're starting to see some movement on the local currency side. So I think TLG, who's maybe in the room, they just recently announced their a large fund for local currency debt in Nigeria, which I think is one of the first of its kind, right? So you're starting to see more and more people being open to local currency debt. I think secondly, you're starting to see also some more first loss guarantees through organizations like the World Bank, right?
Correct.
So, for example, with smartphone financing, there's a big that is kind of the initial device you almost need to now actually even collect, right? So if a company doesn't have, if an individual doesn't have a smartphone where they can use, mobile money very readily and pay back, you're going to have NPLs there through the roof. So that first step, almost in my opinion, is smartphone financing, and that's where, even Meta actually, like, they're doing some first loss guarantees for companies and for banks to say, hey, we want to support this type of borrower. I know it's too risky for you. We will guarantee, the first $1 million or $2 million or whatever of losses, and now you actually incentivize the banks to come in.
You still need cheap debt on the continent.
Yeah.
And we haven't solved that yet. And I guess that as we all do the work, as the likes of TLG deploy in their own way, more local debt providers begin to see it as a de-risk space. But it's still a problem.
And it will continue to be a problem, especially now that the interest rate is going it's going up in Nigeria. Though thankfully, it's going down in the U.S., but it's going up in Nigeria, like it's almost 30% higher, right? Or it's just huge. Now, I want to switch gear to something, piggyback on the last conversation I had, the last panel talked about. So mobile money transactions in Africa is over $1 trillion. It's a big market. If you look at it globally from SYST, it's the first place where mobile money was started, and it's huge. And telcos are powering that. They're leading on that. If you look at where those markets are huge. And they own the largest share. But we're also seeing David versus Goliath scenario in Senegal, where Wave actually took the market share from Orange and gained significant market share where nobody was expecting that to happen in the last 5 years. But we've not seen that replicated elsewhere. I mean, Nigeria is a different place because it's not a mobile money market. So you have Fintech like Paga and the rest who are leading the charge. But we've not seen where opportunity like that has been taken over by Fintech. What other overlooked opportunities exist that VC are not seeing beyond payment in Africa? Because 5 years ago, if somebody says you should go into mobile money and invest, you're going to waste your money because M-Pesa and the rest will kill you. Are there other spaces that we're not looking at?
It's an interesting question, and I think that the answer lies in embedded finance.
Really?
And using creative ways to either credit score people through alternative sources, or sell, microinsurance packages for healthcare or for any other thing. Again, it still lies in embedded finance, and depending on the markets, what's most critical in that market is what the fintech providers can potentially serve. In Nigeria, there's a huge insurance market. Obviously, the amount of money you have to spend in terms of re-educating the market to believe that the blood of Jesus is not the only insurance you need is extremely high, but that's a market that is huge and untapped yet. And microinsurance companies are, selling bite-sized insurance packages just to ensure that people begin to see the importance of insurance. So things, and simple, embedding it with your smartphone sales solves, that's insurance.
So microinsurance.
Yeah.
Can I double tap on that question and throw it to you, Tayo? So, and then maybe I should explain it better. Are there verticals in fintech that there is an obvious Goliath, but there is a space for David to come in that we're not seeing now, that maybe you guys have seen in the next 10 years and nobody's really looking at?
I don't know if I'd sort of put it that way, but I think the way, when you ask the first question without putting about the Goliath, I think there are two things that stand out to me. First of all, if we just look at the everyday person in Africa, the small, medium business, they are trying to buy, most people are buying and selling, right? And what do they need? They need access to finance to buy and sell. And I like to say in Africa, we don't have a banking problem. We actually have an access to finance problem. And if you ask Aliko Dangote, he will tell you he has access to finance problem. So everybody does. So how do we fund that? How do we finance that, right? And I think it actually has to be local debt. I don't think the answer to that is actually US dollar debt. Because these currencies are not anytime soon going to be appreciating. Okay, So I think there's local finance there that we have to figure out to finance those, and I think it would be through ideally embedded solutions. So I'd rather lend to someone. I see Tunde here. I'd rather, what they do at Vendees, where they are building the supply, digitizing the supply chain for restaurants. Well, now they actually know what that restaurant uses and what they buy, et cetera, and they can actually say, I will finance that, right? Because in 7 days they'll get their money back. And they have the data to show that. So that's one. Then the second one actually is something that Benji actually said, which I thought was really cool, which is that what's the largest export? We're all sleeping on the Africans who have left the continent.
Diaspora.
And on serving them and serving them well. And I think that's a huge opportunity. And
So
that's actually a way to get involved with the continent without taking local currency risk.
Since we're doubling down on the embedded finance, Eva, you have something to add to that?
I was just going to add other areas
Okay.
where there's opportunity, because
Yeah.
that came right now. So we're seeing it in two areas. The first is, actually it's three. We're seeing there's no ACH, right? And one of our companies actually spun off a company that does the actual push of, you can take this from my bank account. And that, that was actually a business in the asset management space that really just had customers coming in with physical currency and to add to their accounts over time. But to enable the growth of a savings product and a product that's helping the savers beat inflation, you need the ability to push and pull from bank accounts. And so they're creating that. The other area where we see a really big bottleneck is core capital requirements for fintechs that are regulated across the continent. We have companies in fire drill emergencies right now, and we are lending to them for that money to sit in the bank account just to meet the regulatory requirements. So I see that actually as an investment opportunity as well.
Yeah, that's fine. And I think that there's some consensus here about there are still opportunities. So when people say fintech is overdone in Africa, it seems what I'm getting here is that it's not.
We're
There's
just
still
scratching the surface.
Lamaya, you're about to say something.
Yeah, I think, mobile money is that first layer, right, of payments. I think there's also now a lot, in addition to other subsectors within fintech, there's things you can layer on top of mobile money, right? So there's interoperability between different mobile money providers in different countries. Recently, I don't know if you saw, but PayPal has a partnership with M-Pesa in Kenya, where you can now fund your M-Pesa wallet with PayPal and vice versa, right? So now, I think Kenya is the only country they're currently partnering, or they're currently operating in, but as they expand to other markets as well, now, you have infrastructure that allows you to move money between your M-Pesa wallet and potentially, your MTN wallet in another market,
Yeah.
right? So I think that's one area. I think another area I would say is transaction monitoring and fraud detection.
Yeah.
I think the telcos have not figured this out. They have so much volume, so much
Yeah.
transaction volumes that they're processing every single second, and there is probably such a high risk of fraud, and so companies that can come in and actually maybe even use AI and ML, we'll probably get to this a little bit later, to help the telcos actually understand their data and flag things that might be out of the ordinary. I think that there's a big opportunity.
Something just came to mind, account reconciliation and account management. That's a very big problem across banks, across telcos, across fintechs, those that have multiple accounts and managing everything through an Excel sheet at the end of the day. That's a big problem to solve, and nobody has actually solved that properly.
So again, just to remind everyone, we're talking about venture capital impact on fintech evolution in Africa. I just want to quickly segue into another conversation I would like you guys' perspective on. There's a lot of it recently I'm seeing now with cross-border payment solution. Probably it has to do with AFCTA, or probably a lot of entrepreneurs are just waking up to why is cross-border not being solved in Africa, or probably because there's a lot of money there. Are these opportunities overestimated? Because I see one every other day now, and I'm sure Lamaya will have a viewpoint on that because we see quite a number. And where do we have the most opportunities in this? Is it corridors, or is it product? Is it crypto? Is it new places that we're not seeing? Where are the opportunities in cross-border payments? Alvaro, you want to go?
Yeah, sure. I think the way to think about it and to maybe approach that problem is, look, it's evident that the cross-border payment problem hasn't been solved in Africa yet by virtue of the fact that you need dollar intermediation in every single transaction that you do cross-border in Africa, right? Now, if you believe that at least for the time being, will not change because it's the way that it has been done and it's the way that it works in other markets across the world, dollar intermediation is needed, then it becomes much more a problem of how do you match the dollars that are coming into the country or the region to the dollars that are needed for exporters to pay for their supplies outside of the country or the region, right? And I think that is the first step to solving an interesting cross-border problem or cross-border trade problem in Africa, right? There are dollars coming in, even if it might seem that that's not the case. As you were saying, right, there is a large, Africa's largest export is the diaspora. They are sending dollars into the country every single day, right? So there are dollars coming into different countries in Africa every single day. And there is a perceived lack of dollars for exporters that are paying for supplies abroad, right? If there is an efficient way to match those two, I think that's a really interesting solution to solving some of these cross-border payment problems. And we've come across a number of solutions that are trying to do something like
So what I've heard is you've also expanded that the opportunity is there.
Yeah.
And it seems to me very obvious. I mean, if you look at the remittance market in Africa, it's bigger than so many GDP in Africa, right? But there's so many players as well.
Oh, yeah.
What are we
But
missing?
It's not a winner take all.
Yeah.
Okay.
Can you guys hear me on this?
Yeah.
Am I on? Yeah. Okay. So it's not a winner take all. On Paga, for example, over 200 companies are leveraging our infrastructure today. 18 of them are remittance players,
Interesting.
and they represent about 20% of our volumes, right? Last year. So, and it's growing at a really fast clip. So it's funny, when I got here, I saw WeWire,
Yeah.
and the CEO was like, "Hey, really good
It's
to
one
meet
of
you."
your customers.
My first time meeting him actually was our customer, and I'm like, "How's everything going?" He's like, "It's working great. I'm good." So I think there's a lot of opportunity. I think everyone finds a different sort of niche of where they focus on, right? You look at Lemfi has focused on. They started out with the UK, then they went to Canada. Now they're going to India, right? And they're going to China as well. So everyone's taking a different approach in where they're going and how they're focused, right? You look at what Benji and Co are doing, right? So they started out with 11 countries. Now they're doing, competing with the D-Local or building that kind of service. So I think there are different angles to take on it, and I think it's a big market that I would actually say that you have to have a play in there somewhere, right? In what you're doing, it's not fully solved. It's not, even if you just focus on just remittance on its own, it's not 100% crisp and easy and convenient for people to fund, send, receive, right, on all three angles.
So I agree it's not a winner take all. I think that's something that everybody should, agree with because it's a huge market. But there will still be losers, right? And Lavanya, you spend a lot of time in this sector. You really hone in on them. What would differentiate the winners and what would make the losers lose as well?
Yeah, that's a good question. I mean, in our pipeline, I'd say 80% of the companies that we see in the cross-border space are touching Nigeria. So we would like to see more diversification outside of Nigeria, whether that's Francophone Africa, whether that's Tanzania, maybe even DRC. There's a lot of markets that have, that are large manufacturing hubs, for example, that need to import from outside and have a demand for USD. So I think there's a lot of opportunities just that maybe the entrepreneurs that are solving this, the problem is so acute in Nigeria over the last 12 to 18 months, so it's natural that that's where a lot of the pipeline is. But I think we're starting to now see more and more companies that are operating in other markets and other corridors as well. In terms of what's going to make one stand out, I think it's network effects. I think that's a big aspect, right? So a lot of these players are trying to be, and I'm talking more about the B2B side, they're trying to be market makers, right? So if you can get liquidity across different currencies, now you can offer the best prices, the fastest liquidity, and that's really what I think gives you an advantage. So I do think there is some degree of first mover advantage if you are playing your cards right, and I think that's where some of the winners will come from. Secondly, I think there's options to win in the infrastructure play, right? So yes, there's 18 remittance companies, but if you're an infrastructure provider who can support, then it doesn't matter who's the winner.
Yeah.
You can be an infrastructure player.
That's what you're doing.
And, yeah, so I think that's another way to win in the space without being customer facing. Yeah.
So,
I just wanted to quickly add that I think it's about the utility, right? How easy is it if you have an infrastructure for other startups to plug into your APIs and use it, or if you're just direct to customer B2B, how easy is it for them to log into the app, do the transfers? Again, utility. And I've seen so many people in this space, especially those building via crypto, that the utility is dog shit. You basically can't log in and make sense of the interface, and as such, they start out using affiliate marketing, get more people, onboard a lot of clients, but then the usage begins to drop because it's not easy for customers to continually use the product. So those that sort out utility, make it very easy, make it second nature for people to use their products, be it from the infrastructure side or be from the end user side, would win in the market.
I would also just say reducing transaction costs, driving down costs, but also innovating around the Forex exchange. So if you're not using the dollar, does that actually provide an edge in the spread or not? I think there's a lot of room for innovation around exchange rates.
so if I get it right, so you can do a corridor that doesn't include dollars. So
Well, it's crypto right now.
oh, crypto. Okay.
I mean, it's a stable coin right now.
Yeah. Which creates another challenge.
Sorry, can I be contrarian? I've seen companies using stable coins and then a bunch of companies using fiat, and I think the ones just focused on fiat are more successful.
Really?
Right, yeah. And because it's just so much friction, right? I remember my wife had to change money from, for South African rands to Naira, and she went to use one of these companies that uses stable coins. And first of all, she didn't really see the stable coins, right? Like, so she had to move the rand to a specific account. She had to first of all open their wallet with them, move the rand to a specific account, and the next thing she knows is that, it's in the account in Naira.
Yeah.
And then she had to move it out. But it's just a step. She never went back, right? Like, it's just like too many steps, right? And just wanted...
is it a friction?
Yeah.
But that's what it's supposed to solve.
Yeah.
So to solve for you, adding more steps and makes it...
Right.
It's adding more steps to it. And at the end of the day, to get the stable coin, you need dollars somewhere. Like, you have to buy it. You still need float. You know, manage your float. So why don't you just manage all this in fiat?
Yeah. So the way I've seen them solve it is to actually get liquidity providers from different platforms.
Yeah.
Like Binance used to
Sure.
be. You get
In fiat, you need liquidity provider as well.
Yeah.
But I think it's an easier conversation to have.
And I think maybe just to add to Laviana's comment on what you need in order for something like this to work, I think people are sleeping a lot on doing a regulatory first approach here. I mean, it is absolutely necessary when you're moving money across borders to know and work with the regulator, because you get to a certain scale, you will for sure get a call from the regulator, right? Whether you're doing it in stablecoin, whether you're doing it in fiat, whether you're doing it in any sort of thing that we haven't seen, right? So if you start with a regulatory first approach, and it can be a hassle and it can represent a cost to the company, but I think it's a cost worth taking early on.
Good. Now, one of my last questions, this is a loaded question, and I get this question as well as an investor raising a fund, and it's an Africa question that people do ask. And it's a loaded one. I'm just going to read it out here. I wrote it down. So bear with me. So as of 2022, only 33% of Africans have bank accounts, right? It's changing. I mean, first time I started reviewing data 2019, the number was far lower. Despite this, hundreds of millions of Africans remain unbanked, uninsured, and they lack access to finance for their businesses. Additionally, 57% of Africans still don't have internet or stable internet. So given all of these challenges and the opportunity, we still have more Africans that need to have bank accounts. How can VC or even entrepreneurs like Tayo, who is investing his own resources, company resources, how can you strike a balance between maximizing returns and promoting inclusive growth in African fintech? Because there seems to be a lot of opportunity for inclusive growth for the people who don't have it. But how do you get money from them? as well. How do you strike the balance between that? Who want to go first?
I think it's an interesting question, and every day when we sit in front of the IC, there's that question of, is this just, is the focus on impact, or is this the focus on returns? And whether we like it or not, based on our mandate, we also have to focus on impact. But again, we have to find the balance. Wherever you raise your money from, the LPs are going to always ask for their returns within a period of time that they expect you to return the money. However, when we invest, we look at who is building market-leading solutions that could also spur impact in other sectors. That's how we solve for that, right? We cannot solve for impact alone, but we can invest in companies that could potentially create other bigger markets for other people to thrive.
Taya, you're eager to jump in.
Yeah, I don't think there's any balance to strike here.
Yes.
I think there's only one answer, which is build scalable businesses that have customers and they're solving a need, right? And I love this when Tokumbo, who's one of my first institutional investor actually, invested, and I remember, and the fund, people look at it from the outside and say, and it is an impact fund. But I remember asking, okay, what does success look like? And what is it about impact? It's like, well, every business in Africa is an impact business, just by default. So just go out and build scale your business and solve the problems and deliver to people. And, and the reality is like, I don't think of it as, so it's funny, there are a number of terms in my business that I've always balked at. Right, financial inclusion. What the heck is that? I don't know what that is. I didn't start this business for financial inclusion. I started because I couldn't make a payment, and I'm like, why can't I make a payment? And oh my God, it's worse for you guys. Like, wow. Okay. So I think as a venture-backed business, your job is not to go and solve these problems that you're talking about of, how many people have bank accounts, et cetera. And actually, the statistics say that, but people save their money somewhere, right? Whether it's under the bed, or I remember the first time I went to the cocoa farmers in Ilefe, and I went in Nigeria, and I wanted to say, can we offer a digital solution to cocoa farmers? And we presented Paga to them, et cetera. This fairly old man, and he had a book beside him, like a ledger. And when I was done with the presentation, half Yoruba, half English, trying to, my Yoruba was not that great. And he finished, when I finished, I said, but our farmers save with us, and we give them 8%. The bank won't give them 8%. And they have to save their money with us for 12 months at least. And then they come and take a loan from us for 6 months, and we charge them 12%.
So you make 4%.
And it's working fine.
Yeah.
And he opened the book and he's like, here's where we record it. Do you know what I mean? So now all those people will be counted as, they're not banked. But they actually are in the true sense of what they're doing. And they actually have, and so what is this, digital thing you're talking about, right? And somebody still has to convert to cash. Yeah.
So it's just something there which I didn't have, which is there even a balance to be struck? Is it just invest in market-creating innovation businesses solving real problem in Africa rather than fanciful stuff, right? And then the output of that will be the impact, right? Because that's what you're really focusing on.
The only thing I would add to that is I completely agree with you, but I do think that there needs to be an incentive for entrepreneurs to build. And not everyone is going to have the same level of...
Beyond making money?
Beyond making money.
Okay,
Absolutely.
but there's other self-interest things to do, right? So for example, I know that I wanted to, see how I could contribute to the development of Africa, right? But ultimately, my desire to also build a large business, right, and do very well financially is enough motivation.
Is enough motivation for you, and I completely see that, But what I'm trying to say is, it is also the job of venture capitalists to create ecosystems, right? It's not only about the financial return. And again, there's a common misconception that venture capital creates once, or venture capital exists once the opportunities to invest into companies exist. But that isn't always the case, right?
Yeah.
And particularly in frontier markets, if you set up the funds first, then there will be a large incentive for people to build, right? Because they see that there's entrepreneurship in this, and it's the diaspora coming back and saying,
Yeah.
hey, it's worth it to build in my country today instead of staying in my cushy Morgan Stanley job in New York, right?
Lavanya,
I just want to quickly add that the LPs also dictate some of the terms, right? So let's not forget that.
Yeah.
So if an LP says, I want X number impact, you better do that because that's where you get your money.
True. Until people like Tayo exit his business and has a lot of money and they become an LP.
Yeah.
And then that will start changing the story. Lavanya.
Yeah, I mean, I think on that point, like, you need patient capital
Yeah.
as well, right? I mean, even globally, VC funds take 15 to 20 years sometimes to actually return capital fully to their investors. In Africa, we have to, at least as a base case, expect the same thing, right? But I was just going to say, I mean, we need to also invest in infrastructure, right? So the same way you need to invest in logistics to make an e-commerce business work.
Yeah.
In fintech, you need to invest in digital KYC. You need
Yeah.
to invest in payments, right? Without those things, you're never going to serve the bottom, the base of the pyramid, right? Because if you can't KYC someone, how are you going to know that your loan is going to someone that actually exists, right? And that's where companies, like Open High, who's doing address verification, and Smile ID, who's doing digital KYC, I think they are core infrastructure layers that everyone else can then build on top. And I think you also need to now have an open conversation with the regulators, right? Because at one point, for example, the CBN earlier this year said businesses and individuals need to be verified physically with agents, right?
Yeah.
That's not scalable. So how do we get the regulators to kind of come around and say, no, if we really want to, their incentive is to have financial inclusion. If we're going to do that, we can't just rely on agent networks.
Yeah.
We also need to be able to
So going back to what Alvaro said, there's a work to be done by VC. We played a lot of role in engaging with CBN on that. There's ecosystem building work. I've got 4 minutes. I've got this burning question that I would feel bad if I don't ask it, which is currency devaluation in key markets. In Nigeria, Kenya, Egypt, and also there are lots of other things as well too, volatilities and regulatory stuff that you mentioned. How is that influencing your investment decisions? What is the conversation going on in your IC when it comes to currency now?
Well, number one, our IC is not a detached group of people. It's myself and my partners and a few independents. But I think the knowledge of what our companies are how they're navigating, how they're hedging, how they're understanding currency, and maybe how they have a diversification of currency within their businesses is how we make investment decisions. So it's a little bit different. And we, maybe just quickly answering the last question, embedded in this, we invest in conscious leaders. We invest in leaders who are thinking about all stakeholders and also all problems. And therefore, those leaders are typically managing, and then we can support in building ecosystems. We can support. So we're actually trying to put together a banking facility for our founders to naturally hedge and have an easy place to naturally hedge their currency. But our IC is not a removed group of people that doesn't have the background, and I think that really helps in the investment decision making.
I just want to quickly. Okay,
go for it.
So at Launch Africa, our goal, again, is to build the future of business relationships. And for us, despite whatever is happening in the local markets, we invest strategically because we see either synergies or potential for collaborations between not just the local market, but across markets. And so that also drives our decision making. But also, I mean, is there, from a portfolio construction perspective, is there diversification in terms of, sector, in terms of even country, but also diversification in terms of business models? So no matter what the currency risk is, we're always going to still invest because, again, we know that it would last for a time, but there's light at the end of the tunnel.
Lavanya, how is that affecting valuation?
Yeah, I mean, obviously we value companies based on their USD revenue, right, and their USD growth. So I think one thing that's been really challenging over the last 12 months is we're seeing great companies in Egypt and Nigeria and Kenya, but their USD, they're growing in local currency, but their USD growth is not as strong. And so then we need to make a decision, okay, if there's no companies that are growing in USD terms, okay, now let's see those that are growing at least in local currency terms. Is the currency stabilizing? What is their growth projections going forward? I mean, I think valuation is a triangulation between current traction, growth, future potential, team, there's
Yeah.
a lot of different
Yeah.
different factors, but yeah, I mean, generally, local currency revenue generating companies are, their valuations are probably a bit more depressed than they were 18
Good.
months ago.
Tayo, on the other side now, do you have a lot of pushback and engagement with the VCs and investors?
No, it's not about pushback. It's that we have to diversify our revenue base because everything you just all said is right, and so that's a big part of how my team is thinking, like in our execution, is that we have to diversify, but we also have to take a long-term view.
Yeah.
Right? Nigeria is going to be the next India of Africa, right? It's on its way, right? And so we're here to play the long game around that, and then diversifying our revenue base going to other countries as well.
I've already have the last word.
Yeah, I was just about to say, and VCs, I think, should understand that, and the investors into VCs, I think, should also understand that, right? So it's a matter of everyone understanding that, again, this is a long-term game, that hopefully currency blips are a short period of time in a longer-term investment horizon. Yeah, not much more to add beyond diversification.
This has been great conversation. I just want to recap to say, these guys have brought a lot of good perspective. One of the big takeaways for me is that there is still opportunity in Africa. Fintech is not overdone. Ladies and gentlemen, please give a hand to my guest. Thank you very much.